In this video, I want to go over a realistic trading plan to kind of get us from maybe you're a beginner trader, maybe you've got a small account, maybe you're working with a prop firm on a funded account. But what I want to really talk about here is having realistic expectations, realistic goals, and building consistency. Because when we start to build consistency, that's what's going to build confidence. And here's a big, kind of light bulb moment here. A lot of traders are inconsistent because of the fact that they're not confident in their setup, they're not confident in their trading plan, they're not confident in the market, they're not confident because maybe you have a couple of winning days and then you give everything back and you go into a period of drawdown. They're not confident because maybe they started off with $10,000 in their account, took it to $25,000, and now their account is back down at $5,000, giving away all the gains. So the problem is that if you truly want to be a good trader, I'm going to be completely honest with you. You have to go through the mud. And what that means is I don't mean that you need to go through and lose thousands and thousands and thousands of dollars. What you need to do is actually build a solid foundation of consistency and market awareness in confidence in your strategy, in your trading plan, and slowly build that up. A lot of times traders, what they want to do is they see these prop firms, they see, $100,000 account, I can get, 3 of them, or I can get 20 of them, I can have $1 million in funding. Guys, you don't realistically get $100,000 to trade with. Maybe you get some type of margin where, you can buy, 15 contracts or 20 contracts or 50 contracts. So you can make all this abundance of money. However, the max loss, the max, trailing drawdown, whatever. For example, like TOPSTEP is $2,000. You have a $2,000 account. So you're not managing $100,000. You're managing $2,000. So on that $2,000, a lot of times people will over leverage themselves, trading way too many contracts, trading mini contracts, where you really don't have an account set up to trade mini contracts, and you don't have a solid trading plan intact to be able to sustain that. And what that means is that you might, because trading is all about probabilities. So the market might be hot, your setup might be working, you might win a string of 2, 3, 4, 5 trades in a row. You might make $500, $1,000, $500, $300, $500. You might take an account, whether it's you're trading futures on a personal broker or you're trading through a prop firm. But let's say, for example, maybe you make $2,000, $3,000 within a week's time or 2 weeks time. That's not a lot of data. You haven't taken enough trades yet. You haven't built up your account enough yet. You haven't seen enough market conditions and cycles to kind of be able to sustain the rough patches. So what tends to happen is traders will continue to play that same size, however many contracts you're playing, multiple mini contracts or 10 micros or 20 micros or 50 micros or whatever the case may be, because you like seeing those gains of $500, $1,000, $800. However, when you start to run into the probability side where you start to take those paper cuts and you start to take those losses, because every trading system, every market cycle environment is going to give you those days where you might take 2, 3, 4 losses in a row. The market might not give you the best setups and you're taking entries, and maybe you start to overtrade and you have one bad trading day. And if you're realistically managing an account that's $2,000 or $1,000 or $3,000, and you're trading futures and you're trading micros, or you're trading multiple or minis, and you're trading multiple micro accounts, like 10, 15, 20, 30 micro accounts. I've seen people, trading 30, 40, 50 micro account contracts, and it really doesn't, make any sense, because of the fact that one loss on a particular trade where you didn't even give it enough time to see if it was going to pan out and work blows your account up, liquidates you, just due to the fact that you're oversized. If trading the NASDAQ, I know on this channel I speak a lot about trading the NASDAQ, which is NQ, or MNQ, which is the micros. And I love the micros for the NASDAQ. I personally trade micros. I don't really see a need or reason to trade minis. Just doesn't make any sense to me. right? Unless you're looking at an account with 2, 3, 400, 500 million dollars of your own hard cash, and you've been doing this for a long time and you know how to manage that kind of risk, I would say stick to micros. It is what it is. But the point is that a lot of traders, they want to get to the imaginary finish line, and you want to speed up the process, and you see everyone else trading full time, and you see people taking, $50,000 payouts or $20,000 payouts, and you want to be there too. And you think as soon as you get that one funded account, or as soon as you get enough money to be able to trade, 4 or 5 mini contracts, that, life suddenly, changes. However, you haven't been around the markets long enough, you haven't taken enough trades yet, and you haven't really perfected a strategy. I would recommend to start off trading the ES, okay? And by trading the ES, which is the S&P 500 futures, I would start off trading the micros, which is ticker symbol MES. I would realistically focus on 5 to 10 handles or points, whatever you call it, a day. Now, with the MES, it's going to move on micros $1.25 a tick, okay? And there's 4 ticks in a handle or point. I call them points, but handles, right? So for every 1 point that the ES moves or the MES moves, because you're trading micros, you're going to make $5. Now let's run through a little bit of let's run through some series of trades here. If you guys have been following me, you guys know that the way that I trade. If you guys are in Evolution Traders, you guys have been seeing my chart, my charts being posted up, and you guys know how I'm looking at supply and demand with the previous day's high, lows, pre-market, overnight session lows and highs, and then my 20 moving average. So in this particular case, we're looking at today's price action. We already opened up the overnight session. We opened up the New York session trading below yesterday's highs and below yesterday's lows. Automatically, that's a big red flag for the upside. We should have came into the market thinking downside until we got back into this channel of at least yesterday's lows and at least started testing 4609. Okay. With that being said, you can see here at around 5:10 a.m. Pacific Standard Time. And again, I know not a lot of you guys are going to be up at this time or trading this time, but I'm just going to run through the possible scenarios. Okay. Let's say, for example, we're trading just one micro contract. And again, I've seen things thrown out there, as of recently with, position sizing, this and that. And I've always preached small position sizing until you're consistent, until you're profitable, until you build up a fat cushion, right? Even with the guys I've been teaching and trading with in Evolution Traders who trade options, because I came from the option side of things before I even started trading futures, I would preach to them, start off trading Apple, start off trading AMD, trade one contract that cost maybe $75 or $100. So the max we can lose is $100 on the overall trade. However, we're going to slim that down by, not allowing the contract to expire completely worthless. That's talking options. That's for another video on another day. However, so I'm a big firm believer in position sizing, and I'm a big firm believer in taking a series of trades. And what I mean a series of trades, I mean working the same strategies, working the same stop loss, working the same setups day in and day out, and actually going through the mud and taking this serious to where you're logging in 20 trades and you're logging in 40 trades, and then you're going back in your journal and you're analyzing what time of day works best for you, how many handles work best for you taking profit wise, and then you can kind of tailor down your trading plan to what fits you, because we can all use the same strategy. We can all have the same kind of trading plan outline. However, each individual trader is different. Our personalities are different. Our emotions are different. Our, financial triggers are different. So we need to kind of dial in, our take profits to what's comfortable to me. We need to dial in how much risk do we really want to lose per day to me, right? So it's like what may be okay for me to lose might not be okay for someone else, and what is okay for someone else to risk on a trade might be way too much for me personally, right? It has nothing to do with the strategy. It has nothing to do with how you trade or your trading plan. It just has to do with, you need to really dial in your genetic makeup. Okay. I learned many years ago, I am not a swing trader. I can't do it. I love seeing people post up, 200, 300, 400% wins. That's great. You guys catch a big majority of the move. I just can't stomach it. I can't sit there. I don't have the patience. I don't have the discipline to kind of wait each and every single day. I don't have, the courage to hold through earnings or news or this, that, and the other. For me, scalping and day trading has always been what fits. I like it. I'm able to sleep at night. And at the end of the day, that's what's most important to me. Yes, maybe I make smaller gains on a per trade basis. However, I can do this on a day in and day out basis each and every single day. Okay. It doesn't matter if the market's bull market, bear market, or chop market. There's a way to trade the markets. And that's just what works for me. Maybe that doesn't work for you. Maybe you more are a swing trader, or maybe you're, a longer intraday day trader using the 4-hour or, the hourly candles. So you have to kind of dial in the trading plan to you. But let's get back to the case in point here. So let's say, for example, we see this setup here. We already know we're below all these levels of supply here. Momentum is shifting down. You can see the overnight session lows are sitting down here at 45.52. Okay. Let's say as soon as we cross below this 20-period moving average, we get our reason why candle here at 5:10 a.m. Pacific Standard Time. We set a 1-bar stop. Okay. We set a 1-bar stop. And on this 1-bar stop, we would essentially be giving ourselves a risk of from 45.70, well, actually from 45.80, I'll give it the 2 cents, the benefit of the doubt, from 45.80 all the way down to 45.77. Okay. So essentially we're giving ourselves 2-3 points worth of risk. Now, if we're going to trade one contract, one micro contract, essentially we would be risking anywhere between $15 and $20 on the trade. And that's being generous. So between $15 and $20 on the potential trade, that's all we're going to risk. I don't think someone losing a trade for $15 or $18 or $14, depending on, when exactly you're getting in and out, is going to really kill anyone. Okay. Now this short setup confirms here at 5:15 in the morning Pacific Standard Time, and within 5 minutes goes from a price of 45.78 down to 45.75. This was a 3-point move. You would have made $15. This was a 1-to-1 trade here just in a matter of 5 minutes. Now, obviously, we want to maximize our profits as long as we don't get taken out with our 1-bar stop here. And as long as we continue to trade below the 20 SMA, we're going to continue to ride the trade and continue to maximize profits. Now, long story short here, okay, before I actually show where I would have gotten out of the trade, but long story short here, if someone was up and they seen this setup at 5:10 in the morning, essentially you could have got into it at a price of 45.77. There was no indication to get out of it until 45.27. Okay, so this is a 50-point move, 50 handle move all day that essentially you could have caught from top to bottom. Again, that's besides the point because nobody really catches the whole move. I'm just case in point. However, if you see here, we consolidate for the next 10 minutes and then we get our next leg down here. So our next leg down goes to 45.72. Our entry price would have been 45.78. This is a 6-point move to our second little kind of breakage here. So 6 points times 5, okay, would be looking at a $30 move. So now we're at a 2R. If you don't know what 2R means, it's time to start doing some homework, okay? So if we're gonna risk, okay, 1 bar and we got 2 bars, in those 2 bars, if we're risking 3 points and we made 6 points, we just now made a 2R on our investment. That's a $30 profit to a potential $15 risk, okay? So if you're trading one contract and you're in the beginning stages, maybe you're learning my strategy, maybe you're wanting to perfect yourself, maybe you're wanting to get more consistent, maybe you want to avoid blowouts, this, that, and the other. Maybe you take your $30 and you come back in the market tomorrow and you do the same thing again. Now, I've drawn up something here that's not a concrete plan, but it's an idea, okay? It's an idea that I want to have people's, wheels start turning. So futures little trading plan here, MES micros contracts are going to move $5 a point times 5 points, an average of $25. What I mean by this is that if we're going to get $5 a point, because we're getting $1.25 a tick, let's say we have a little bit of a goal of to try to scrape off 5 points in the market, okay? 5 points in the market would net us around $25 profit, okay? It's not a lot of money, okay? It's really not. However, if we do this times 5 days that we get to trade, would be $125. If we do that each and every single week, would be $500 a month. In quotations, in a perfect world. Because we obviously know we're not going to win every single day. We obviously know we're not going to win every single trade. So this is hypothetically speaking that if we were to win 5 days times 4 trading weeks in the month, we would make $500 a month. So where does that kind of lead me to? What's my point here? Okay. My point is, what would an extra $500 do for you right now? If you walk outside your house and there's someone walking their dog down the street and they handed you $500 and they did this each and every single month and you have no idea or reason why, would you continue to take that $500? Would that $500, if they said, you know what, somebody from up above told me to give you $500 each and every single month, 9 out of 10 of us are going to take that $500 each and every single month, if not 10 out of 10, right? There's nothing wrong with an extra $500 a month. Now, $500 a month would definitely pay for most people's gas every single month. $500 a month could definitely pay for someone's car note or insurance each and every single month. $500 a month could definitely pay for your cell phone plan, your internet connection. It could definitely be en route to saving for a nice vacation once every 2 or 3 months. It could definitely help with your rent payment. It could definitely help with your mortgage. It can definitely help with taking your wife or your boyfriend or your spouse or your kids out to a nice meal. So $500 a month doesn't seem like a lot. However, $500 a month could really change someone's life, okay? And we don't have to just stay here. Obviously, we can start to scale up. Obviously, we can start to increase the 500 to 1,000 to 15 to 2, but it's going to take time. And I'm not going to talk about the big numbers because most people can't consistently make $500 a month. So we need to stay here until we can consistently make $500 a month. Now, obviously, because we don't live in a perfect world, we're not going to win 20 trading days in a row for the month, right? This might be 30 days it takes us to win 20 trading days. It might be 45 days because we're going to have a losing day, or maybe we're sick and we can't get to the screens and we don't trade that particular day. So let's say, for an example, for us to make $25 a day trading micros on the MES, which is the S&P micro, futures contracts, let's say it takes us an average of 30 or 45 days before we hit 20 winning trading days at just $25. Okay, that would be an extra $500 in a scenario that we just broke down every 30 to 45 days. Let's call it 60. If someone handed you $250 a month, you would still take it. $250 a month would pay for your auto insurance. $250 a month would pay for your cell phone bill. $250 a month would be able to buy groceries for the week. $250 a month would pay for your internet connection each and every single month. So $250 a month can definitely start supplementing and compensating for some of our living expenses. At the end of the day, the whole goal here is not just to trade, to look at a bunch of pretty numbers on the computer screen. The whole idea is to take money out and use it in the real world. And I'm trying to tell people, until you can get consistent of making $25, $50, $100 a day, you're never going to make $1,000, $500, $5,000 consistently a month, because you don't have the infrastructure or the confidence or the discipline or the actual experience of making small amounts of money over and over and over and over, that you get lucky and you make these, big wins in the beginning of your trading career, and then you get stuck on that you're always going to make $500 or $1,000. However, you've never really managed $25 in a day. You've never managed $50 in a day. You've never done, you've never made $100 consistently for 20 days out of the next 45 days. If you haven't done that yet, what makes you think you're going to be able to trade and make $1,000 a day? It doesn't make any sense. Be realistic. This is a perfect trading plan for you. Start off trading the MES, start off trading micros, start off trying to get 5 handles, 5 points a day. Start off trying to risk and have a max pain of $50 or $75 max loss on the day, okay? And try to shoot for $25, $35, $45, $55 in profits a day. Do this for a month's time and then start to reflect. Can you even make $25 a day in these markets? Because if you can make $25 a day, you can make $100. And if you can start making $100 a day in these markets, you can make $200. And it goes on and on and on and on and on. However, you have to start with the basics. Okay, you have to start with the basics. If I go back to the trading chart here and we look at what was going on, because most of us weren't going to be up, you know, prior to the New York Open here trading this session. So the next real trade that we would have had was going to come after the market was open here. So you can see this candle here at 6:30 a.m. Pacific Standard Time. New York session is going to open up here. We're kind of just slowly trading sideways here below the 20 period moving average. The level I would have been looking at would be the 45.52 area. That was the overnight session lows. What I would be looking for here is for us to break these session lows here and close below. At 7:40 a.m. Pacific Standard Time, we get that. And at 7:45, we get our confirmation. So we break the overnight session lows here, 7:40 candle. So this becomes your reason why candle. Okay, so this is your reason why candle. We're already below the 20 period moving average, and we're already below yesterday's lows, and we're already below yesterday's highs. So this is telling us we should be playing to the downside. You would be throwing your money into this candle here. And again, if we are on the pace to try to learn how to be consistent and try to grab 5 handles out of this market, your entry would have been somewhere around 45.49. In 5 minutes, it goes from a price of 45.49 all the way down to 45.44, which is almost 5 points. Next candle opens up and goes down to 45.42. So from an entry price of 45.49 to 45.42 in a matter of 10 minutes, you were able to scrape 6-7 points. So on this particular trade here, even if you treated it as a scalp, would have been able to scrape off somewhere between 5, 7, 8 handles in a matter of 10 minutes. And that would have been somewhere around $30, $45 profit. So now we're starting to look very, very good of hitting our daily goal of around $25. Again, because remember, it only takes 20 trading days out of however long it takes you, whether it's 30 or 45 days, to make that extra $500 a month. And as soon as we make $500, as soon as we show ourselves and we prove to ourselves that we can make $500, we can then increase to 2. Okay, we can increase to 2 micro contracts once we at least prove to ourselves that we can make 500. Until we get to over 1,000, we're going to sit at 2 contracts until we get over $1,000. And once we make $1,000 in profits, from there, we can either see if that's enough money for us to trade, if we could control these trades and control these drawdowns and these emotions. And if we can do this for another $1,000 and potentially get our accounts up to $2,000, right? And if you're trading on a prop firm, which would means that now you've passed your prop firm evaluation, you're funded, you're trading 1 contract, you're trading 2 contracts, maybe you've been doing this for 30 or 45 days. And then once you get to around $2,000, you can go to that 2 or 3 contracts, and I would kind of keep it there, right? I would keep it there. If you drop down to, let's say you made your $500, you increase to 2 contracts, now you're up to $1,000. You have a bad week and you're back down to around $700. I would go back down to trading 1 contract until we get over that $1,000 again, and then go up to 2. And that's how you're going to be able to scale up over time. And you can probably scale up a contract every $1,000, $2,000 of profits after you've shown yourself at least 20 days, okay? 20 days of consistent profits. So if we want to start off making $25 consistently, we need to do that for at least 20 days. When we can do that for at least 20 days, then we can increase our size. When we can increase that next size and trade 2 contracts and be consistent at taking out between $35 and $50 a day out of the market for another 20 days, however long that takes you, those 20 winning days are not going to be in a row. So it might take you 32 days. It might take you 54 days. It might take you 65 days. However long those 20 trading days takes you at 2 contracts of making around $50 a day is when we can increase to 3 contracts. I hope this video makes sense. Again, if you guys like this video and you want more training, definitely join evolutiontraders.com, become a lifetime member. It's a one-time fee, guys. I do a lot of this one-on-one training with you guys, building out your trading plans, showing you guys the markets live in real time, available to answer questions whenever you guys need them during market hours, of course. And if you do like this content, like, comment, subscribe, and I'll catch you guys all next time.